Listen, you guys probably think this is just a regular strategy video. It's not. This isn't your everyday strategy video. This strategy is actually what I use every single day trading SPY. And this is how I'm able to make the money that I'm able to make. And this is how I'm able to make the money that you guys see me make all the time with the same exact strategy. And now you might be thinking to yourself, this might work for you, but this might not work for me. And if it doesn't work out for you, now you can cross it off your list that this strategy is not going to work for you and you can move on to another strategy. But I would definitely give this a try before you do that, because this is probably one of the simplest strategies that I use. And just because it's simple does not mean it's not profitable, because it's all about that risk to reward. So let's get right into the video. SPY has been slow. It has been choppy, but that does not mean that there's no setups for SPY. For today example, we had the setup to the downside. Now I wanted to play it close to the 60s, but as you guys can see right around here, right, you guys can see that there's support. Now, what is this strategy? Basically, it's just this intraday support and resistance levels, and it's not that regular, supply and demand and this and that, ICT, whatever. No, I keep it simpler than that, because the only way that you're profitable is not the strategy itself, it's the risk management with the strategy. Now, I try and keep the strategy simple so I can focus on the hardest part of trading, which is the risk management and the execution. Those are the hardest parts of trading. Why would I make trading even harder by focusing so much on the strategy itself? As long as I have a good, simple strategy and I can focus on getting that nice risk to reward, I'm going to be profitable. Think about it. The only way they're going to be profitable is if you win more than you lose. Okay, which means that's your risk management. You have to be a good loser. It's all about the risk to reward and how you apply it to the strategy. I feel like I can be profitable in almost every single strategy because of my mindset, because of that risk to reward. I know how to win more money than I lose. And I know that if my win rate is this much, then I need to make this much in order to be a profitable trader. And I could apply it to any single strategy, which is why I try and keep this super simple. So, for example, I wanted to play it under the 60s, but I saw that it kind of held up there, and then we saw this right here. So I'm like, the best entry is going to be under the 50s. Why? Because you can see that it kind of faked you out right here, right? It came under that 60s area and it came right back up. It held the 60s, which means that this could be a probable entry, and I saw it kind of hold up there, and I wanted to wait for it to close under there or really show weakness, and it didn't. So it bounced at the 60s again, which gave me even more confirmation to wait until that 50s area. And then we start to come up, come right back down. Huge candle to the downside. It could have just stopped right here and it came right back up. Maybe, but again, I'll take my risk to reward. I'll take the chance, because everything is just probabilities when it comes to trading. So I took my chance, I took the probability, and I got in, and I waited till it cleared the 40s into this low right here. And when it cleared that, that's when I got into puts. 20 seconds later, literally no joke. If you were in the live trading call, you guys literally got in. 20 seconds later, 35%, and I sold. The reason why I sold after this 455, now mind you, we went from 455 all the way down to the 50s or to the 60s just like that. It literally just dropped another 40 cents like that. As soon as we broke that 455 and then we started going down, that's when I sold. And I sold the whole thing. I was not chancing it. Why did I not chance it? Because it was almost a guarantee that we were going to come up. Why was it a guarantee that we're going to come up? Because look at how we dropped. Number one, SPY has been chopping around like this. I was lucky that we got under that 455. I thought it was going to hit 455 and bounce. So I just gave it a second and it just did not stop. The reason why I fully sold was because we already had $1.50 move already, right? And this is already pushing. And you could feel when SPY it's pushing, and then you could feel that it's like this is the last push and it's just going to go. Right? And it's just about just timing the market as well. That's a super important thing as well. But you could just see it, right? Boom, boom. We start to get this wick right here. And then another push like this. We're already almost $2 deep in this move. The chances of us coming up, number one, was high right here. But then we got another push, super high. I'm going to get fully out right here. There is no way I'm taking any more chances on this, because the probability of this continuing is super, super low. Fully sold, 35%. Don't get greedy. Don't hesitate. That's it. Keep it simple. The strategy is the simplest part. It's about how you execute it. Now, let's go to another example. So as you guys saw, I traded this upside move yesterday. Why did I trade this upside move yesterday? We had the zone right here. And what is a zone? What is these bars? It's reactions. Same thing right here. And I didn't trade this right here, but I'm talking about this one right here as well. But there's a zone right here. And you could even go a little bit lower like this because of that wick. We're looking at reactions. The reason why the market does this and this and this is because of reactions. It reacts to the price action. History repeats itself in the market. Go like this, right? We have the zone here. Where did the zone come from? Number one, we start to see the zone being created when we come up and reject. So now that it rejected, we have something right here. It comes up again, doesn't break through yet. We have this high of the candle right here, and then we still pulled back. Now we have the zone high right here, and then we have the zone low, right around this open right here of 451.21. We have these reactions. So this is where price is reacting it. When we break out, number one, this is not a time of sales lesson, but we're looking at the time of sales. We're looking at the level 2. We want to make sure that, this wall is being cleared, and we want to make sure that there's enough buyers here, and we want to make sure there's enough buyers over the sellers here, right? Because if we have no buyers here, it's not going to go up. And if we don't have enough buyers over the sellers, it's not going to go up. Literally, the market is an auction. That's it. So we had enough buyers. We broke out. But I didn't trade that, right? Price action was slow. I wanted to give it a second. Price action has been slow this whole entire week. I am not going to be the type of person that's going to be a risk on. I'm a very risk off person. Come up, reactions. Reactions right there. We come down, coming down back to this zone almost. Literally, if we put the zone right here, it touched it almost exactly. We come up, and then this is the zone right here. We have the reactions right here. This is all we need because then it reacted here again. So we know there's something in this area that's reacting. We break above it and we try and hold the 80s. Once we get almost that close, because it was only like 10 seconds away from closing, that's when I got filled. It retested it. I was not worried because retesting it, my stop loss was the 70s right here, because if it comes back down, I know I'm wrong almost right away. Then we come back up, and then we break out. This is when I sold. Why did I sell right there? Number one, we see and identify the weakness right here in the 10s, right? I'm already starting to take profits off, but this is my final sell. Why is it starting to get weak? How do we know this? Again, 452, we saw the breakout, right? That's what I wanted. I wanted that 452 breakout. We got that breakout into the 10s, right? That's when I start selling. But you see this wick, right? My stop loss, I said I'm keeping it tight. So I moved it up to 452. Comes up to 452. This is my stop loss right here. So I'm in profits either way. This thing comes up, has another move, and you can see that it's not continuing. And you can see this on the time of sales. You can see this. And I literally said this live. I'm fully out right here at 20s. Slow, right? We see that it's in the 20s. And if it was going to continue, it would have kept going, but it stopped. It stopped in the 20s, and it had a hard time getting above like 22. And that's just weakness right there. Number one, the candle before showed weakness, but if it wanted to reverse that weakness and continue, it would have continued right there, and it didn't. And I see this all the time, right? Another thing, experience pays, right? This is why time in the market is huge. You can see this. It always happens. Then this is when I fully sold. I'm not hesitating. I'm not taking the risk anymore. Fully out right there. Nice scalp. That was a 35% scalp. And it's literally, it's not, I wouldn't say it's simple, because it might be simple for me, but it might be hard for you to identify these zones. And this is why, you really should just study up on this zones, right? See what's reacting in the market. This is another zone, but I don't trade this late, which is why it probably didn't break out as big as it usually would. But look at all these reactions right here, right? Look at the high right here, reaction, and then it rejected again. Look at this, right? Make the zone right here. Rejection, and then just consolidation up and down, up and down. You had a nice move right there. I personally wouldn't take it because how choppy this is. It's way too choppy, and it's just way too late in the day. It's 2 o'clock. It's not even power hour yet. It's just way too choppy. But this is an example of the zones, right? This is just for practice. You're practicing with these zones. Same thing right here, right? And this is a really good breakout, right? And the reason why I didn't want to get this high right here, this higher of the 452.69, is because there's way more reactions down here. There's a lot more reactions right here, right? And then there's more reactions down here. This is where it starts rejecting. Where is the best price action? It's right here. Rejection. If I move this zone up to here, price action, it doesn't look as clean. It doesn't look like it reacted as well, right? So this is why I put it down to here, and I get this open right there. Tried to, came back down, tried to again, and then finally goes above that. Once it breaks that high, after it failed it, right? It failed it right here. Once it breaks that high right there, that's when I'll get in and boom, right? But I don't want to say, oh, that's when I get in, that's when I get in. I'm only talking about the ones that I got in. I got in here, right? That's the one that I took. And then the one that I took today was this downside move. These are actual trades that I took live. So hopefully this video helped you guys a little bit. Let me know in the comments down below if you guys want more of these types of videos. Also, I live trade every single morning in my Discord. So if you guys are interested in that, the link is in the bio, and I'll see you guys next time.